US and European share markets ended last week stronger after there was further encouraging news coming out of the major economic centres. There is still some concern about Europe's problem countries. Greece has been asked to lower its government spending. Meanwhile, over in Portugal, they have seen unemployment increase to 10.1%. This is the highest level in 23 years. Total bad loans at Spanish banks are now 5% of total loans. This is about 3 times the level here in New Zealand. There are still some issues in Europe, however this was overshadowed by better than expected economic data coming out of the US, as well as some pretty good news coming out of global companies. The New Zealand dollar was trading over 70 cents against the US dollar for the better part of last week until the US Federal Reserve surprised the market by increasing the discount rate later on in the week. This is effectively the rate that banks are able to borrow short-term money from the Federal Reserve. Previously, it has been at 0.5% for the last 3 years, but the Fed increased it by 25 basis points. Markets saw this as a clear signal that the Fed is feeling more confident about economic activity in the US and that they may increase the more important federal funds rate earlier than previously thought. Currency markets have seen the US dollar back in favour at the end of last week, and this has seen the New Zealand dollar trading under 70 cents again on Monday morning. The good news for New Zealand beef farmers is that US prices have increased again over the past week. Harsh weather conditions continue in the US, and this is putting some real pressure on procurement. Domestic as well as imported supplies are limited at the moment. While the prices are very high, US market analysts are suggesting that they will decrease in time, as buyers are reluctant to pay these high prices more than 1 to 2 weeks out. Demand is still very weak in the US, with supermarkets offering specials of US $1.99 per pound, leaving very little margin in it for retailers as well as producers. With demand still very weak, when the procurement pressure does come off, this is likely to mean New Zealand prices will weaken.